Hey everyone, welcome back to our channel. Have you ever wondered if a stock market crash could be your ticket to wealth? It might sound crazy, but history is packed with stories of those who turned market chaos into fortune. Today, we're peeling back the layers of financial history to reveal how you can potentially profit from this or the next big market downturn. Hit the subscribe button, then buckle up, because this video is packed with 7 information that you can use to change your life. First things first, what exactly is a stock market crash? It's a sudden, sharp drop in stock prices across the market, often leading to a bear market. These crashes are fueled by panic selling, economic downturns, or bursting asset bubbles. Think of it as a financial thunderstorm after a long, sunny spell in the market. But here's the twist: where most see disaster, a few see opportunity. Let's time travel through some infamous stock market crashes. Take the 1929 crash. The Dow Jones Industrial Average nosedived, wiping out billions and sparking the Great Depression. Yet, some sharp investors who bought stocks at rock-bottom prices or shorted the market made fortunes. Jesse Livermore, for example, famously shorted stocks and pocketed $100 million. This would be over $1.5 billion in today's dollars. His contrarian investing during the crash is legendary. Fast forward to 1987's Black Monday, when the Dow plunged 22% in a single day. While panic reigned, others scooped up undervalued stocks that later rebounded. Then, the 2000 dot-com bubble burst, crushed tech stocks, but investors who bet on companies with real earnings saw massive gains as the market recovered. And who could forget the 2008 financial crisis? Triggered by the housing market collapse, it sparked a global recession. But investors who bought at the market's bottom in March 2009 watched the S&P 500 quadruple over the next decade. Hedge fund titan John Paulson, for instance, bet against subprime mortgages and turned a $15 billion profit. These stories prove that market crashes can be financial gold mines, if you know how to play them. So, how can you position yourself to profit from a stock market crash? Let's break down some key strategies. One strategy is buying the dip. This means snapping up stocks when prices are low, betting on their recovery. Historically, the market always bounces back, rewarding patient investors. But timing is tricky, fear often clouds judgment. Another strategy is short selling. Borrow shares, sell them high, then buy them back low to pocket the difference. It's risky. Stock prices can rise, leading to unlimited losses, but it can be highly profitable if you nail it. Another strategy is using put options. These give you the right to sell a stock at a set price. If the stock crashes, your put option skyrockets in value. But options are complex, best for seasoned investors. Another strategy is buying inverse ETFs. These funds rise when the market falls, offering a simpler way to bet against the market without the headaches of short selling or options. Each strategy has its perks and pitfalls, so choose wisely based on your own due diligence and your personal risk tolerance. What do the pros on Wall Street suggest during a stock market crash? Here's their playbook. First, Wall Street recommends you diversify your portfolio, spread your investments across stocks, bonds, real estate, and commodities to cushion the blow. History has proven that a well-diversified portfolio is your financial safety net. Next, Wall Street recommends that you invest in safe haven assets. Gold and US Treasury bonds shine during market turmoil. They're like financial shelters when stocks tank. Next, Wall Street recommends that you hunt for undervalued stocks. Use metrics like the price-to-earnings ratio to find solid companies trading below their true value. These undervalued stocks can be hidden gems, poised for a comeback. Finally, Wall Street recommends that you keep some cash on hand. A cash reserve lets you pounce on market bargains without selling other investments at a loss. Wall Street veterans always have dry powder ready. Following these tips can help you navigate a crash with confidence. Let's not sugarcoat it, profiting from a stock market crash is no walk in the park. It demands nerves of steel and a bulletproof plan. Market timing is notoriously tough, even for pros. And strategies like short selling can backfire spectacularly if the market defies your bet. During a crash, volatility spikes, and liquidity can vanish, making trades tricky. Emotionally, watching your portfolio shrink can test even the toughest investor. Fear and greed are powerful forces. Stick to your stock market investment plan to avoid getting burned. Take a lesson from 2008, while some investors panicked and sold at the bottom, others held firm or bought more, reaping huge wealth. Discipline is your best friend in a crash. Here's a golden nugget from the stock market legend Warren Buffett: be fearful when others are greedy and greedy when others are fearful. That's the contrarian mindset that you need. When the stock market is euphoric, stay cautious. When it's in despair, look for opportunities. It's easier said than done, but it's the key to getting rich during a stock market crash. In the end, getting rich from a stock market crash isn't about luck, it's about preparation, knowledge, and discipline. By studying historical trends, mastering strategies, and following Wall Street's wisdom, you can turn market mayhem into your financial triumph. The fact is, stock markets will crash. It's not if, but when. So, start prepping now, and you will be ready to seize the opportunity. Remember, the market loves to keep us guessing, so as always, please do your own research before making any investment decisions. Smash that like button, and subscribe for daily wealth building, stock market opportunities. I would love to hear from you, so please let me know your thoughts in the comments. Thanks for watching. Stay sharp, keep learning, and may the odds always be in your favor.